Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.exchange. Conducting workshop in Chennai and Mumbai, online workshop for US trading. For details, contact our office. The contact numbers are given in the description. The Nifty fell for second day. The fall was so severe that from Friday's high to today's low, Nifty has fallen about 500 to 600 points. 500 to 600 points just in two trading sessions. That too, 2 days, 1 day before weekly expiry, the next day on the day of weekly expiry, the premiums will shot up like, 10 times, 20 times. On Friday, the 26,000 put was trading around 20 rupees. I'm sure that, would have gone more than 300 rupees today. So that is the kind of, problem the option seller had. So what people call it as a gamma effect. So in the last, very close to the expiry, if the markets make a big move, the loss can be very high. Like sometimes, it makes sense not to trade in the short term, so it's always keep some money in the long-term options. Maybe I can just show you some of the trades. They are only paper trades, so they are not the real trades. Okay, so you see, these are like some of the paper trades. So this is January month straddle, and if you see 100 lots, because from January onwards, the lot size changes to 65. It is not 75. So 6500 means is about 100 lots. And this one was created on 26th of November. So this about 2 weeks before. So 26,500 call, 26,500 put, both sell, but the people call this a short straddle. And put is giving about 7.6 lakh loss, but call is giving about 13.19 lakh profit. So the net profit, it is close to 5.6 lakhs. For 100 lots, 5.6 lakhs. So that is equivalent to about 5,600 profit for each lot. So always remember, don't trade in the short term, trade in the longer term. Now, give another example. So this is the short straddle, but not next month. It is the next year. So next year, December 2026. This one was also created on the same day. So I don't know why I put 6,750. It should have been 6,500 or 7,500. So it is 100 plus lots, we can say. The call was sold around 1,320. Now it is 1,100. Put was sold at 1,150. Now it is 1,250. So there is about 6.8 lakh loss on the put side, but there's a 14.6 lakh profit on the call side. So there is a net profit of 7.85 lakh. Taking this as approximately 100 lots. So for each lot is about 7,800. So you can see, same about 100 lots each. Okay, January straddle has given less profit. The next year December straddle has given more profit. Right? So these are all like naked straddles. There are no hedges. The hedges, usually people, those trade in the long-term option, they don't buy the hedges in the long term, they buy the hedges in the short term. So these two are two different strategies. So why I'm saying this, when the markets are very, very volatile, like this, one day RBI policy, Nifty shoot up 200 point, next 2 days they fall 500 point, 700, 800 point in a matter of 2-3 trading sessions. Trading in the short term is very, very difficult, but trading in long term is much easier, right? So in our workshop, we focus more on trading long-term options. And in fact, I can tell you, in entire India, I'm the only trainer who talk about long-term options, who focus more on long-term options. And probably the SEBI also came to know PR Sundar is concentrating are teaching long-term strategies. So because of that, what SEBI has done, for those who are trading in long-term options, they brought 5% additional exposure margin. So therefore, there are some plus points and minus points for the people who are trading in long-term options. So the minus point is that you have to pay extra margin money. So this is only for people who have a large capital, right? So I still can remember, I have taken my personal trade sometime last year, October, and for the current year, December, 26,000 short straddle I have taken, and the combined premium was 3,500 rupees. And after nearly 15 months, looks like, this December, Nifty is going to settle around 26,000. Had I held on to my position, I would have made 3,500 rupees profit per share. So that translates into what? About 2.5 lakh rupees per lot. But the problem is that I exited along the way. So, one day in a workshop, the people asked me, sir, how much profit you made? See, my problem is that I'm a teacher. The teacher may not always follow what he teaches. And I tell you, if I had followed what I taught, I would have become a bigger rich man by this time. So what to do? Sometimes, psychology and other things come into the picture. Sometimes, short term, you do some trade, you get into trouble, you want more margin, you close your long-term positions, and so on. So I have a lot of strategies like this, straddle, strangle, ratio spreads, calendar spreads, and many interesting strategies, which are like, I won't say it is a safe, right? But no, everything comes with a risk. There is no risk, there is no reward. And imagine some people who have done the straddle, just after the coronavirus, Nifty shot up 100%. Or just after Lehman Brothers collapse, again Nifty shot up 100%. Forget about all those days. Without anything in 2024, Nifty shot up from 19,000 to 26,000. Yeah. So, they are like, this is actually not the workshop. I cannot explain everything. Right. But today's fall was really, really surprising. There was no news at all. Was there any news about the rupee hitting all-time low? No. There is any news that is affecting the economy? No. Is a global cues are very bad? No. But why the hell market kept on falling? I do not know. At some point of time, I have seen 49 out of the 50 stocks in Nifty 50, they were down. Bharti Airtel was the only stock that was trading in slight green. Otherwise, the remaining 49 stocks were down. Mid caps and small caps, no need to say. And today, around 15% of the total number of stocks traded in NSE and hit a 52-week low. There are about 3,000 stocks are trading in NSE, and out of that, about 450 stocks hit 52-week low today. And then, our Nifty 52-week low is somewhere around 21,700, and now we are closer to 26,000, but still, and today 15% of the stocks hitting a 52-week low, that you can imagine what is a kind of huge underperformance in and mid cap and small cap. So why we talk about mid cap and small cap? Because, most of the retail people keep the money there only. And usually the people don't come to a large cap. Even I check with many people I meet, I always tell them to put the money in mutual funds. So they say, sir, we are putting the money in mutual funds only, but we are putting in mid cap mutual fund. We are putting small cap mutual fund. And nobody put the money in large cap mutual funds or hybrid mutual funds. I'll tell you the best mutual fund is a hybrid one. Right? So when the market looks, overbought, they will sell the shares, move the money to debt instrument. When they see that the markets are very, very low level, they offload the debt mutual funds, the debt instrument, and move the money to equity. So they have the flexibility to move equity to debt, debt to equity. And on a risk-adjusted basis, debt fund will give better return. And pure mutual funds may give more return when the markets are good, and the returns will be very bad when the market is very bad. Okay, so always go for a hybrid mutual funds. Or yourself, you can do that hybrid. Like let us say if you have got 100 rupees, put 75 rupees in debt instrument, put 25 rupees in equity mutual funds. So if the markets come at an attractive level, like fall 5%, 10%, then offload 25% of your 25 rupees in debt mutual funds, move the money to equity. Then in case markets rally, a fantastic rally within a shorter period, and offload the equity mutual funds, move the money to debt funds, right? But if you do it yourself, then there's a problem of income tax, the capital gain tax, right? And if they do themselves within the fund, then you are not doing anything, so only when you sell the hybrid fund, you are liable for tax. So anyway, today market was very bad. I hope market settles somewhere. And negative things, number one, at some point of time, 49 stocks were down in NSE, Nifty 50. And second thing, the number of stocks hitting 52-week low is very, very high. And the third thing is that Nifty closed below the first trading session's low. And I told you in a series, if the first trading session is rallying, then that day's low should not be tested. Okay, so that has been not only that tested, it went well below that and it closed well below that. So the markets are not bullish. And then, the only negative news I've seen, Trump threatening to put some tax on agriculture products, but like, agriculture products, they're not big companies. I don't know if that was the reason for today's fall, then why yesterday the market fell. So the markets are falling on their own weights. Probably, they were expecting the US-India trade deal to happen. If that is not happening, so maybe the disappointment. But traditionally, December is a lackluster month actually. So anyway, so all is not well, and we still have 3 more weeks for December. I think the hope of 27,000 is completely dashed. At least now, if Nifty closes above all-time high, 26,300, people will be happy. But, buy the fear, sell the greed. So there is a fear in the market. Now it is a time you can look at some small cap and mid cap stocks which are available at a very, very cheap price. Anyway, I'm not an expert in investments. So one of my friends was telling me there are many, stocks that are available at a very, very cheap price, so they're like, their market cap is much less than their net worth, right? So I also told him, okay, please share some of the stocks to me. I will also consider investing in some small tranches. So it is a time. So because this year it is a complete washout, so maybe we can expect some kind of a rebound next year. But I'm not expecting any very big rebound by the end of December. Maybe a January month, the market may start rallying. So rest of the things we will discuss tomorrow morning. Hope you enjoyed watching this video. Thank you for watching.